Hare Krishna. Welcome to Tax YouTube channel. This is CA Rohan Harpingai, practicing chartered accountant based in Mumbai, also partner in Motilal and Associates LLP, member firm of Mars Network. And today we are going to conduct special video on the topic handling block credit and Rule 37A under GST law. So let's dive into it. Let me allow to share my screen. Yes, so today we are going to discuss extremely relevant in the current GST environment, that is topic handling block credit and Rule 37A. We will also go through ITC reversals in supplier default and practical risk management. So earlier, professionals used to focus on whether ITC is eligible or blocked under Section 17, subsection 5 of the CGST Act. But today, the real challenge is a different. ITC, which is otherwise eligible, gets blocked or reversed due to procedural or supplier-related failures. That is the main cost of today's topic. So the session will focus on two dimensions. Traditional block credit, that is under Section 17, subsection 5, that is a limited scope there. But other second one is a practical block credit due to what reasons like supplier default, non-payment, non-compliance, rule-based reversals, especially Rule 37A. So our focus today is how to handle such block ITC in a real life, how to prevent financial losses, and how to advise clients effectively. So let's understand today's session framework. So we will clearly understand the block credit is not just Section 17, subsection 5, that is the limited by the under the Act, but therefore there are three layers of the blockage. That is the legal blockage, as I said, under Section 17, subsection 5. Then there is a conditional blockage, Section 16 conditions, and then there is a procedural or system-driven blockage, that is rules like 37 and 37A. So in practice, most disputes today arise from layer 2 and layer 3, not due to Section 17, subsection 5. So that we will going to our focus for the today's discussion. So moving further, let's understand what is practical block credit. Okay, this is the most important slide of the session. We are not talking about ITC, which is inherently eligible, that is under Section 17, subsection 5. We are going to talk about ITC, which you have invoice, you have received goods, you have paid GST, but still ITC is blocked. So that is what I call practical blocked credit. And we are going to discuss that. So this is where the professional needs to be focused also. But moving further, let's also understand Section 17, subsection 5, okay, for the context purpose. So I'm keeping this slide briefly mentioned because intentionally, because Section 17, subsection 5 is a well settled. There is a no planning scope there, and earlier either allowed or not allowed. That is the only thing happened under the credits which are blocked under Section 17, subsection 5. So the real professional challenge is not here under the Section 17, subsection 5, but where the other two dimensions which we are going to discuss further. So let's move further, understand real ITC risk areas. What are they? In real practice, 90% of the ITC disputes come from these issues. So let me give a practical situation. You purchase goods worth rupees 10 lakhs plus GST. You pay to the vendor, then you claim ITC. Later, supplier doesn't pay tax. Department says reverse ITC, and this is the real battlefield, is what we are going to discuss. Let's understand Section 16, subsection 2, clause C, that is the core condition. ITC allowed only and only if tax is actually paid to the government treasury. Then only we can have this is the most dangerous condition in the GST, because you cannot control the supplier, but you suffer the consequences if supplier defaults. So this creates what? Compliance risk, litigation risk, and also cash flow risk. Working capital gets blocked due to non-availability of the ITC. So moving further, let's see Rule 37. That is the 180 days payment. So this is another example of practical blocked credit. Even if supplier is a compliant, if you don't pay within 180 days, ITC will get blocked. Okay. So blockage is not always supplier fault, but from our side, we may unable to pay within 180 days. That is the conditions mentioned under Rule 37. So let's see Rule 37A. So earlier confusion exists. Now Rule 37 clearly says that if supplier doesn't discharge tax, reverse ITC is what Rule 37 talks. If supplier doesn't discharge tax, reverse ITC is what Rule 37 says. So let's understand legal effect of Rule 37A. This is a big shock for many taxpayers. Earlier, if ITC appears in 2B, considered safe, but now not sufficient. Supplier must file GSTR 3B also. So we need to follow. So let's moving further, let's see the timeline under Rule 37A. This creates what compliance checkpoint at your end, that is from our end. Okay. So as a professional must track vendor compliance till the September and not just at the time of the booking. Also understand moving further interest impact. So this is where financial impact becomes serious. Even though default is by supplier, interest is borne by the recipient. So let's understand re-availment under this. So this is only a partial relief because what working capital gets blocked whenever ITC is blocked. Interest cost is also there. Tracking complexity is also going to be there. So this re-availment is only a partial relief, as I say. Okay. So how to handle block credit? Now the very important part of our today's discussion, how we can handle. So let's see a stepwise approach. First, this is the most important practical side for all of us. So handling blocked ITC requires what? Structured approach. Step one, identify reason. Okay, is it legal block? That is section 17, subsection 5, that is nothing can be done, or a procedural, then which can be managed. So that need to be identified first. That is whether legal block or procedural. Okay, then you move further. Second step, supplier management. Okay, then follow is not optional anymore. It is mandatory. We need to follow supplier for our right, our ITC. Otherwise, we will not getting that ITC if supplier defaults. So contracts include what? Third step, GST compliance condition means whenever you contract with any supplier, your contract, your agreement, such point should be mentioned in that. The conditions should be mentioned in that. GST compliance condition, I'm saying. The payment link to the return filing, that is also to be mentioned. Next step, decision making sometimes. Okay. So the after contractual protection, then we will moving to the decision making sometimes. So reverse and avoid litigation, sometimes contest based on the facts. Means many times what happen is that we didn't reverse it and then it goes into the litigation. But if the fact supports us, we can go to that option also. But if practically not possible and it is good to reverse and avoid litigation, go ahead for that. So sometimes context based on the facts also. So next step is re-availment. That is the track continuously. We need to follow up that. Otherwise, credit lost permanently. We need to check every month whether our ITC is getting into the portal or not. So need to follow up the supplier. Moving further, let's understand vendor risk management model. How can we mitigate this risk to the extent possible? So GST compliance has now become what? Vendor risk management function. So before appointing any vendor, when any we are going to go into the contract, check return filing history of that particular supplier or of the vendor. Check cancellation status also of that particular GST registration. So that need to be from our into our system. We do not go to the directly and just sign the contracts or that. We need to, it is a mandatory now to go to the history of the supplier or vendor, whether we need to check that particular supplier's track record, whether return filing is on time, whether payment is going to be in time, everything we need to verify. So that is uncovered under vendor risk management. Then let's see system and process control. So manual tracking is no longer sufficient. We need to have a system driven checks and controls. So large organization must use automation and use reconciliation tools to immediately identify the procedural errors. So that need to be also taken care of. Means we need to be shift from manual to now system generated checks and controls. So let's understand practical case study. So many taxpayer what take ITC and forget about the vendor's compliance. So after 1 year, huge reversal plus interest. So that need not be happen with us. We need to take, if we taken the ITC, we need to follow whether it is reflected on the portal or not. So with that, for that, we need to follow up the supplier. So also let's see what are the common mistakes. So the blind reliance on to be no vendor follow up, no year in review is what these are the mistakes are very common even among the professionals. So that need to be avoided. So what will be the our as a role as a professional? So chartered accountants must now act as what? Risk advisors, system designer. We need to design a system and produce to the our client that you have to follow this and this to avoid further litigations or further complexities. So we need to work on that and compliance strategies. So these are the roles we have as a professional. We need to keep up ourselves update, and we need to just not to give the only a compliance part or the, we need to upgrade ourselves and advise properly on a system generated points to the our client. We need to provide value added service to our clients. So let's understand what are the key takeaways from today's session. So if you remember only one thing, that ITC is no longer in our control. Okay. It is a system driven. So ITC is a conditional right. Supplier compliance is critical. Rule 37 is a enforcement tool and prevention better than reversal. So we need to be very careful while dealing with the new suppliers or vendor. We need to properly mention the terms and conditions under the contract. We need to first track and check the history of the vendors and the suppliers. So what we can conclude here is that GST has a fundamentally changed the concept of ITC. It is no longer just a tax credit. It is a compliance-linked financial asset. If not managed properly, it becomes what? Cost, liability. It affects our profitability. So the focus should shift from claiming the ITC to protecting our ITC. Please note down this. We need to shift our focus from claiming the regular ITC to the protecting our ITC. So that's it for today. Thank you. Thank you so much for patient hearing. If you have any questions, observations, suggestions, then do let me know via WhatsApp, via email, or you can also comment below the video. If you are not yet subscribed to Tax YouTube channel, then do subscribe for latest updates and video series like this. Hope you are gaining valuable knowledge from all these updates and video series which we are conducting on a Tax YouTube channel. Thank you. Thank you so much once again. Bye bye. Take care. See you soon. Hare Krishna.